Hey, this is Adam Hooksema from ProjectionHub, and I'm going to walk you through our Specialty Subcontractor financial projection template. So this template is really built to help subcontractors like plumbers, electricians, HVAC, roofing companies, fencing companies, remodeling services, any sort of kind of specialty subcontractor or specialty contractor. I could use this template to create a set of financial projections, and often you may be asked for projections if you are trying to get a loan from a bank or maybe an SBA loan. Maybe you need some new equipment or work vehicles, perhaps a building, a work building. Any of those things where you might need a loan. Oftentimes you're going to be asked for projections, and so that's what this template is here to help you do. So I'm going to walk you through how to fill this out for your specific business. So the first thing you need to know is that on every tab down here, there are going to be cells that are highlighted in blue, in this light blue color, and these are assumptions that you can change without breaking anything in the template. So I'm just going to kind of walk you through. I have some example data in here already. I may change some of this data as I go and fill out a set of projections for an example subcontractor. So let's think about maybe a plumbing company. So say I'm Adams Residential Plumbing. And we provide residential plumbing services. Let's say we're getting started in January 2022. And let's say I've got I've made a personal investment to start the company of $50,000. And what this means is that accounts receivable terms. So this is saying that 80% of my revenue, of my sales, I collect when I provide the service. So that would be like if I'm going to provide, install a new water heater at a residential home, I would get payment when I do the work, right? Now, let's say you have some commercial contracts. Maybe you have some commercial work that you do. Those jobs you might not get paid for, let's say, 30 days. So if you were doing, let's say, half residential and half commercial, you might want to make this 50%, 50%. All right. Let's say you have a shop with some inventory, maybe $10,000 worth of inventory on hand, and you've got some tools. So in this fixed asset section, you've got $50,000 worth of tools, maybe a couple different trucks, a few different trucks, totaling $100,000. These tools are going to say last 10 years. I'm going to say salvage cost is like what will these be worth at the end of their useful life, and basically nothing. They just be salvage. And then maybe you have a small building, maybe a storage building or something, maybe even just like a pole barn or garage. You could put that here. And let's say you got a $200,000 loan from the bank. It's a 10-year term at 6.5%. All right, so now we're going to create your sales projections. And what you'll notice here is that the way we're kind of driving how you get customers is through advertising, primarily to like get those new customers in the door. So let's say you do some print advertising, and this is saying the cost of a new contact from print advertising. So we're saying it costs $5. So if you spend $100 on print advertising, it costs $5 to get a new contact or potential customer. Maybe this is just someone that calls to ask for a quote. So that could be what a new contact actually means in this case. And so that seems pretty aggressive to me. $100 gets you 20 new contacts. I'm thinking Probably going to be more like you spend $100 to get 5 contacts probably. Radio, same sort of thing. You're probably going to spend $100 to get a couple contacts each month. And maybe some online advertising. So this could be like Facebook or Google advertising. So if people, search for like plumber near me or plumbing services in, my city, there could be a cost per click, and then maybe they fill out a form on your website for a contact form. $2 is way too low. That might be a cost per click, but to actually get them to fill out the form, let's say it's going to cost you $100. So that gets you 5 new contacts. Okay, so now you have 12 new contacts in month 1 from paid advertising. And we're saying what percentage of those new contacts become repeat customers. So let's say you close 60% of them. That's what this is saying. And then what this is saying is, you have a customer base now. Now, what percentage of this of that customer base becomes repeat customers, and what percentage of them churn or cancel? So, if 60% of them end up becoming repeat customers, let's say maybe 5% of that group kind of cancels each month or isn't a repeat customer anymore, is what that's saying. Okay, so now we've got new contacts. Out of the new contacts, what percentage of the new contacts of these 12 need services each month? And this is right now saying 90% of the new contacts. So these are new people that just contacted you. What percentage of them are going to ask for service? And it's probably going to be a high percentage, right? They're contacting you, reaching out to ask for service. And so probably a high percentage of them, maybe 90%, maybe 80%, actually need service in that first month. And then after that, this is saying basically now you have these repeat customers. Hopefully you provided a good service. And so now the next time they have a plumbing need, are they going to call you? The hope is yes. And then what percentage of that repeat customer base is going to call you each month? So at 8%, if we say 8%, that means approximately your customer base is going to call you once a year. It's 12 times 8%, 12 months times 8%, that's close to 100. So that's kind of what we're estimating here, is that you're going to have, you're going to do advertising to get these new customers in the door. 80% of them are going to hire you for service and right away. And then after that, they'll call you back once a year for additional, residential plumbing service. That's what we have. And of course, you can change any of these assumptions, but that's what we have in here as an example. So now here, what you're going to want to do is put in your different kind of service categories. So maybe toilet replacement, fixing a leak, doing some maybe it's like excavator work, like pipes in the ground. Maybe it's new pipes that you're installing, new toilets, new sinks. Any sort of different services. So if you have kind of your, new water heater, water softener, if you have your kind of standard services, you should enter those in here. And then here, what you want to do is say, what percentage of your total sales does each of these categories make up? So is 10% of your business water softeners? So like if we did water softener installation, and we could say maybe 10% of our total business is water softener installation. And so you'll want to put in all your different categories and make sure that these percentages add up to 100%. 100% of your sales should be represented here from these different options. So it could be a service call. maybe that's 50% of your business. Well, now see, we're at 140%, so we're going to have to reduce some of these other areas. So let's do this. And so now we're back to 100%. So that's what we're aiming to do here. And you'll want to put in your different prices for these different services. So maybe this is, I don't know, it's been a while since I've had this done. I have no idea. Maybe $800 for water softener and installation. And maybe a normal service call, maybe that's $99. And your this is asking for your, I'm gonna expand this a little bit so you can see. Okay, so this is asking for your cost of material. So on a water softener, maybe if it's $800 total, your cost of material for the water softener itself, maybe that's $200. Maybe, cost of labor is maybe $150. So this would be, to calculate your cost of labor, you want to know, what you're paying your plumbers that are out there doing the work. What are you paying them per hour? And then how many hours do you expect them to complete the job? So maybe this one is for a service call, maybe cost of materials, maybe not very much, $10, but maybe you're paying your team $40 per hour and it takes them 1 hour to complete the call, complete the service, so $40 cost of labor. So you can kind of see how you fill out this table. Now, as we come down here, this is saying you can increase your average revenue by 5%, or you could change this to something else, to a higher growth rate if you'd like. And then your costs are probably going to increase over time as well, and so you can increase your costs by, this is an annual growth rate, we're saying 4%, maybe you might think it's going to be more or less. And see, there's no blue sections down here, so this is all just calculations, calculating your total revenue based on these numbers and your total cost of goods sold. So I'm going to jump back up here real quick and show you one other thing. So let's say, so this is saying total repeat customer base. It's assuming you're starting from 0 here, but maybe in your projections you actually have, maybe you already have a customer base. Let's just say, well, let me jump over here and just show you at a glance what we've got so far. So right now we're showing revenue based on what we entered in, 82,000 with a big net loss of 87,000. Well, that's because you're starting from scratch. You have no customers yet. But let's say you did have some customers. Let's say you have a customer base of, I don't know, 400 people that you've provided service for in the past. And okay, so 400 people, that's your starting repeat customer base. Now, if we use that, you can just see how having a customer base is going to increase our revenue. Because we're saying 8% of those 400 people are going to be calling us once a year to get service, right? And maybe it's larger. So you could say we've worked with 1,000 different customers that we can have in our database. So now you're at a $300,000 annual revenue. So I'm going to kind of leave it there for now and show you some of these other tabs. So here you can change the amount of money you spend on those different advertising levels. And if you change these, so if you increase advertising, just be aware that you're going to increase the number of new contacts or new quotes that you're providing. Because if you increase this to 200, but it costs you $20 to get a new contact from print advertising, well, now you're going to have 10 contacts instead of 5. So just be aware that when you increase your advertising or decrease your advertising, it's going to end up impacting your sales projections, okay? All right, now I'm going to show you here that you can enter in any of these expenses as either a fixed dollar amount, which most of them are fixed, or as a percentage of total revenue. So let's say you accept credit card, and a lot of your customers pay with credit card. You might have credit card fees that are charged to you when people pay with credit card, and so we're saying here that 2% of your total sales are going to be charged as credit card fees, credit card processing fees. So instead of having to guess a fixed amount each month, you can just say, well, I know it's going to be 2% of revenue. You can add your insurance, monthly expenses, professional services. This could be, maybe what we should say here is maybe you have an accountant, and maybe the accountant is probably going to be more expensive than $25. Maybe they're $500 a month. Maybe you have rent for your office or your building. We also did have a $100,000 building initially on this page, if you remember this building. So, it might be that you don't have rent. So you could zero that out if you don't have rent. And then just supplies. And this would not be supplies that would be like job supplies, because we already included job supplies over here in your cost of material. So you don't want to double count that here. This is just like office supplies. And then you've had utility, internet, and you can add more expenses as you have them down here. As you think of other general expenses you're going to have, you can add those. And then you can add input a salary or an owner draw. So let's say maybe it's just you as the owner, and you have a receptionist taking calls, or an office manager taking calls and helping organize. So maybe that's how you start. That would be okay. Or if you have, you have slots here to add lots of different employees. So, you could have, plumber one. If you just want to, let's say this is going to be 50,000, and you can enter in the taxes, the employer portion of taxes. Let's see, you have some benefits. And then what month do they start? So maybe in the first year, you don't think they're going to start, but maybe in month 13, so that'd be in year 2, you're going to add another plumber. And then maybe in month 25, so year 3, you're going to add another plumber. And here you can just say we've got one of this particular employee. They're going to get a 5% raise each year. And then down here, if you're the owner, you can put in a monthly owner draw. So maybe to start out, you're not going to take any owner draw until maybe for the first 6 months, and then maybe you start by taking out $1,000 a month for the next 6 months, and then maybe you try to go up to $2,000 a month. Maybe just drag that out and across. Okay. So that's what we have entered in here. Now I'm going to go back and look at this at a glance. So just going to kind of show you some troubleshooting here. So now, based on what we have entered, the first year looks pretty good, right? But now we're actually losing money in the future years, and actually sales are going down. So I'm going to go back and look at that and see why that might be. And what we find here is it's because this right here, it says this monthly churn rate, or the number of repeat customers that you're losing. We're saying we're losing 2%. Well, 2% of 1,000 is actually 20. It's 20 people, but you're only adding 12 new contacts. And so if you continue with that trend, you're going to end up losing more customers than you're gaining. And so that's why our sales end up going down over time. So what I'm going to do to hopefully change that, I'm going to, let's say, well, let's increase our monthly advertising here, maybe we'll increase this to 250, maybe increase that to 750. So we're going to increase our advertising to hopefully find more customers and generate more revenue. And we at least have fixed the decreasing sales problem, so that's good news. But we're still showing a net loss, and you know, again, that might be, well, look, we added these 2 plumbers. Maybe we can't afford them yet. Maybe we can't even afford the receptionist until month 13. Maybe this plumber can't start until, I don't know, maybe year 4 and year 5. We can come over here. All right, so now we're looking a little better. We're profitable. If you look down here, net income each year. So you're going to have to play around with this. You're going to have to, you know, make your own assumptions. This is just an example of how to fill out the template, but you are going to be responsible and really need to, you know, understand your own business and how you're going to acquire customers and what your services are going to be and that sort of thing. So now I'll just show you one more thing here. You've got your income statement summary here for 5 years, your cash flow statement summary for 5 years, your balance sheet for 5 years, and then the income statement, cash flow, and balance sheet by month. So now we've got these monthly projections. So you can see that by each month. And the last thing I wanted to mention is just right here. So if you look at this and you're like, boy, I don't know how to fill this out, or this is not really my model, I need to customize this. We are happy to help customize any of our templates. So you can just click this request modification, and it's going to bring you to a page on our website like this. Fill out this form, ask us to tell us how you'd like it to be customized, and we can get back to you with a quote on what it would take for us to customize this for you. And that's really it. So hope that was helpful. Reach out to us if you have questions at support@projectionhub.com. support@projectionhub.com. Thanks.